Okay guys, just to recap what the international income portfolio actually is, well, as you can see, the rules are very simple. Over the period of a year, I can invest 8,000 Australian dollars into non-ASX, non-Australian market shares from anywhere around the world. And the other rule is that I must invest 2 times every quarter at $1,000 in each investment. So having said that, in November 2020, I bought shares in BASF from the Frankfurt Stock Exchange and shares in Realty Income Corp from the New York Stock Exchange. Why did I do that? Well, in this video, I'm going to talk about why from a high level first, and then we'll get into the nitty gritty and the numbers. So guys, you can pretty well guess from just hearing BASF's slogan, "We create chemistry," and from Realty Income Corporation's name itself, what these two companies get involved in and what they actually do for business. Namely, BASF produces chemicals at an industrial level in many different countries around the world. And Realty Income Corporation is a company that owns commercial real estate and rents it out to clients. Now, my belief is that both of these industries are going to be around for a very, very long time, and they're not going away anytime soon. My reasoning goes something like this. Regardless of changes in politics, regardless of developments with climate change and technological advancements, real estate is always going to be around, and chemical production is always going to be around and is always going to be required. And I firmly believe that these two industries and these two companies in particular are going to be around for a very, very long time to come. So I'm going to talk about that in this video. But before we get into it, if you guys are brand new to the channel, welcome. My name is Kras and I make videos about investing and personal finance. Now, I am not a financial advisor, so none of the information in this video is financial advice. However, if you're the type of person who loves dividends and enjoys being financially fit, then please stay tuned because there will be something that you can take away from this video. So guys, if you didn't already know this about BASF, it's a German company based on the XETRA stock exchange or the Frankfurt Stock Exchange. And I'm just going to go through a couple of key facts about BASF. They have 118,000 employees. They are found all over the world, and these blue dots here are called selected sites. That means that they are producing some sort of chemical at this site. So you can see they've got a very, very strong presence in Europe and Germany, as you would expect, in North America, South America, and in Australasia. Now, there's an interesting thing about BASF called the intelligent Verbund concept. And basically what they're doing here is that they're taking existing facilities and they're turning them into supply chain, top down, start to finish, intelligent facilities that use tracking technologies and use large data and big data to get better understandings about their raw inputs, their costs of production, and the sales of the produced products and chemicals. And they use that information to essentially, I guess, reduce their costs and become more efficient. So that's a cool thing that they're introducing into their business. And I think they're rolling that out to future facilities. And if you look here, this little green dot is their Verbund facilities. Oh, sorry, the red one, Verbund facilities. So they've got 2 in North America, 2 in Europe, 1 in China, and 1 in what appears to be Thailand. The concerning thing about BASF's key reporting financial figures is this here, the return on capital employed, only 7.7% in 2019. For those of you who are finance guys, you know that a decent return on capital employed is around the 12% mark, which they managed to achieve in 2018. And in fact, in 2017, they had 15%. If we look at their stock price back in 2017, lo and behold, it was right around their peak where they were very efficiently making use of their capital. Now, fast forward into 2020, yeah, we've got about an 8% return on capital, so their stock price is not great. My whole thesis with investing in BASF is that they are going to start using technology and data to improve their return on capital, okay? And I think that the Germans are capable of doing that. So, having said all that, I don't really want to harp on too much more about BASF, but I do like what they're doing, and I like their strategies and how they are positioning themselves for growth around the world and learning from different sites around the world. So let us jump across the continents to the USA and take a look at some interesting information around Realty Income Corporation. Okay, now I'm just going to scroll through here and stop when I find something that's worthwhile looking at. So they listed on the New York Stock Exchange in 1994, and since then they have managed to return an amazing compound average annual return of 14.6%. Compare that to the S&P 500 of 9%. That is an excellent return, and by investing in Realty Income Corp, I'm investing in a solid company with solid management, and basically management that understand and get it, and they know what they're doing. So let's continue through here. So what do they actually own? Let's look at their portfolio. Retail, 84%, 6,300 properties. Industrial, 10.7%, 119 properties. And I think their focus is going to be more and more on industrial. We can see this from their recent purchase of a industrial property for $41 million, November 16th, 2020, which is basically a McDonald's distribution center. So they're getting it. They're getting the fact that retail is slowly being overtaken by online sales and industrial, and distribution centers are going to be, I think, a key part of that. So perhaps they're going to focus more on industrial, or perhaps they're going to start picking up some cheaper retail opportunities. Either way, I believe in their management. Bit of interesting information here about where most of their revenues come from by states. They own a little bit of properties in the UK as well, but mostly in America. And this is always good to see, that they don't have one single tenant that is overwhelmingly represented by revenues. So Walgreens is their largest tenant at 6% of revenues, and you can see all the other different tenants on this page. They have a modest leverage capital structure, which is always positive, but in this low interest environment, higher leverage is not always that concerning, and we're going to see why we're not concerned. Very, very strong dividend track record. And in fact, I'm going to jump to this in a little bit in my spreadsheet. Okay, I'm going to talk about that a little bit more, but I want to get to this bit here. So what impact did COVID-19 actually have on their rent collection? Well, we can see that it was about a 18% impact. Okay, so not as bad as perhaps the stock price chart would have said it would be. They fell from 80 down to about $50, which is more than an 18% drop, which is about, in fact, a 35% drop. And now they have recovered back up to perhaps a roughly 30% drop. Now, what that means is that, to me, they are a very attractive risk-reward play with a potential immediate upside. When I say immediate, I mean in the next 6 to 12 months of about 10% when they go back up into the $70 range to $75 range. But let's see what happens. Now, let's jump back into my spreadsheet, where you can see under the international income portfolio, I have added BASF and Realty Income Corp to that portfolio. But this is what I want to talk about. I've downloaded all of their dividend data from 1995 to 2020, and I have basically aggregated every single month's dividend payment into yearly dividends for each year, and I've plotted that on a graph. Now, we know that they're called the monthly dividend company, and from their annual report, they say they have achieved a 4.5% compound average annual dividend growth since 1994, and this is the yearly dividends paid per share. I put a line of best fit through those dividends, and you can see that the simple growth of their dividends is about 8% per year. That is fantastic, guys. I still think this company is going to be a solid investment company, and I'm probably going to add more of my own personal money into this company going forward. So, having talked a bit about that, what else did I do in the month of November? Well, I ended up picking up a subscription to Simply Wall Street. And Simply Wall Street, I love it because they give you a very good idea of what type of portfolio you're actually building. So let's just go into Simply Wall Street. I'm going to log into it right now. And I'm going to fast forward a little bit through the video so you don't have to watch me enter all the data in. As you can see, I'm entering my different holdings: VAS, VGS, AGL, Woodside, BASF, and Realty Income Corp. And at the end of it all, guys, look at that. We can see some very interesting data about our portfolio. And this data tells us what type of portfolio we have and what the risks are, etc., etc. So I don't want to get too much into Simply Wall Street at this point in time, but I'll save that for another video. Once again, guys, I really appreciate you watching the video until the very, very end. And if you've learned something new from this video, please leave a thumbs up. If you didn't learn anything new and you didn't like the video, feel free to leave a thumbs down. And keep in mind, guys, please visit my Etsy investor merch store. You can find something very interesting there for your investor friends. Without further ado, guys, thank you once again and see you in the next video.